Hi there, this is Chris from MoneyHub, and this video looks at how your sum insured value, as well as the excess you decide, is going to affect house insurance policies. So without further ado, let's just get straight into it. It's better to see it than for me to talk. So let's just go straight in and choose a property, and I'm choosing one in Dunedin. And what I'm going to do there is just click on everything here. So it's the own home. It's not a rental. It's not a holiday home, and it's not a flip. And then we're just going to choose the size of the house, 125 square meters. And we're going to say it was built in the 80s, and it's on that. Just, of course, both of these things are usually inputted, but that's fine. Right. So without further ado, you can see that the quote here for this example is going to be 1577, and that's based on 400,000. But if I increase that a lot more to around 700, then you're going to see it jump up around $300. But what's more interesting, or equally as interesting, is if I change the excess. So currently the excess is set at 650, but if I drop that down to 400, then it's going to jump up the price. And then if I drop it down to 2,000, that means any claim. If someone smashes 4 windows, it's going to be a $2,000 excess. If there's a flood or something, it's going to be a $2,000 excess. So any claim, that's going to drop it down to 1,600. So you can see that these things do interplay quite strongly. Of course, there's lots of other sort of different costs and different factors which get put into a house insurance policy to drive the quote. But it's really important just to see like how this really throws things around. What we would suggest is never to consider decreasing your sum insured below what the estimate should be or is, because should disaster strike and you need a complete rebuild, the worst thing to be uninsured for the amount that you need. So if your rebuild cost is going to be a 780, but you've decided to only insure for 600,000, yes, you're going to save. Well, for this example, $1,900 a year versus versus 2,200. So you're going to save around $350 per year, but it is going to be expensive, much more expensive should that disaster happen. So these are things just to play around with. And of course, we do think that the excess tool is something which many people kind of overlook, and they think that, oh, I'll just keep it at the lowest, but how many times have you actually claimed on it? So do consider that, because the difference between a $400 and a $650 excess within 1 year is actually going to be around $200 in this example, and that can add up. Over 5 years, that's $1,000. When did you last claim on it? And at the same time, if you do claim, then you still have to pay the excess. But you can see that in this case, the difference between the annual policy is really going to be around $250. So there's lots of things to just be aware of, and just take the time to properly consider. That's where I'm going to leave the video. There's other things that you can look at. Of course, you can look at contents, and then you can change this contents as you need to, and the sum insured calculator is something quite useful, which we outline in other videos. And also you can go for specific items as well. So, and you can change the contents policy. Oh, sorry, you can change the contents excess too. So if you do want to insure contents, which most people do, then that's something to look at. Thank you very much for watching. If you have any questions, we would love to get your comments down below and your questions. We're very responsive to them, and we want the guides to be as comprehensive as possible. So please do leave them, and thanks very much for watching this video.